All right, good morning, everyone, and welcome to today's live stream. Today we have a lot of important questions to answer. We are going to talk about the possibility or the probability, I should say, of a possible bull market for crypto, which basically means a bull market for equities as well this year, 2023. And with me, I have Dirk Hartig from PrimeXBT Academy. His macro analysis expertise are going to help us guide us through the jungle that is the financial markets. How are you, Dirk?
Good. I'm doing very well. Thank you for having me again. Good morning, everybody out there who's watching this live. Oh, good afternoon, good evening. We have audience hopefully from all over the world. Yeah, it has been a crazy couple of days since last week, Friday. I think a lot of information to digest, and I think the movements we have seen in the past couple of days really indicate also that it seems like 90% of the market participants are uneasy what to expect now for the upcoming weeks and months. So let's try to decipher it a little bit today.
Yeah, we had our live stream during the FOMC, the Fed interest rate decision. Was that last week, I believe?
Yeah. It was last Wednesday, I think. No,
that Wednesday, I think.
Wednesday,
and yeah, so definitely check that out if you're interested in how we're approaching that. And you can go to PrimeXBT Academy on YouTube to look up Dirk. A lot of educational content, really good stuff there. So definitely subscribe. They're on Twitter as well. You will find all the details to that in the description of this video below. And I also want to mention that we are starting the new trading program is starting the February the 20th. So you could definitely, if you want more information on that, you should sign up to the newsletter. You can find that on Substack, on RLZ Trading. And if you want more information about the program, you can just DM me on Twitter and I will help you out. We currently have 8 spots left and they're running out. So if you're interested in taking your trading to the next level, you can definitely DM me and we'll talk about that. So yeah, okay. So we had the Fed interest rate decision last week on Wednesday, and I remember how during the actual announcement of the interest rate, we didn't really have a lot of action in the markets. But what happened was in the commentary, the press conference, it seems like the market kind of digested that as quite bullish.
Yeah,
and
absolutely.
Yeah, we saw the market starting, maybe not rally, but definitely move in a more bullish manner. And then I believe on Friday, we had the NFP, the non-farm payroll, and the unemployment data, which was way, way stronger than what the market anticipated. And
I think that was the greatest deviation I've ever seen from what was expected and the reality of the numbers as they came in.
Yeah, that's absolutely, I mean, it's just insane. So what do you think, how do you think that event affected the markets and the risk sentiment that we saw because of, because, on Wednesday there, we had a pretty good risk on sentiment, and then the NFP event came along. And now, I'm watching the S&P 500. I mean, I'm gonna switch to my chart right here. I know we're gonna talk about crypto, but it's pretty much all the same. It's risk on and risk off. And I mean, you look at this trend right here on the S&P 500. There's nothing bearish about this. It actually looks really good. Right now, the trend is intact. We have higher highs and higher lows. I mean, yeah, there's some type of changing behavior here, but we have that here as well. And so the trend is intact. It's definitely bullish. And if we zoom out here on the S&P 500, let's see if I can fit all of this into the on the chart here. You'll see here that we have, as you can see right here, lower highs and lower lows. That's the red one, and then a higher low on this green right here. And I've said here, and the text I've said, a daily rounded retest with a bounce will confirm the bullish market structure. And at that point, I don't see a reason why the bull market would not continue higher for the foreseeable future. And what happened right here is, in my book, according to my technical rules, that's actually a retest on the daily time frame. If you go down to the 4-hour, you'll see that it's on the 4-hour, that's the daily retest. and on the 4-hour, it's also like a retest of that retest. So it's like a double bottom here. So locally, the 4-hour trend is very much alive. The daily trend is very much alive. And it's all about breaking above these highs. And I think the more room we have to the downside to be used as support. So if we have a breakout like that, and there's a lot of room to the downside, it will, we need quite a significant big move to the downside to break this. And right now, I would say that it kind of looks like I'm ready to say that the S&P 500 is breaking the bearish market structure. And what I would want you what I would like you to maybe I have a question for you.
Go ahead, please.
And why is this happening? And why do you think this is happening?
Yeah.
Because it makes no sense.
It doesn't make sense, right? Really, if your charts are so beautiful always, we're just going ahead with your chart now. Can you zoom in a little bit, maybe on the last couple of weeks, make it a bit bigger? I think what we've seen in terms of market moves since Friday is like, for me, really very, very confusing, honestly speaking, because the immediate reaction, obviously, to those strong job numbers, like lowest unemployment rate in I think in years, and if not decades, record number of new jobs outside the farming, outside the agriculture industry, despite all those tech companies laying people off. Well, of course, that maybe goes. We're going to see that in effect next month then in the numbers. But at first glance, and I think we should go into this, it might be very confusing for a beginner trader to see something like this. Well, if the job market is strong,
listen, it's not only confusing to beginner traders. I'm quite confused by this as well.
Okay,
if I'm going to be honest with you.
Let me try to decipher it, or bring in my own confusion about it a little bit. And so I mean, it's like it's a bit schizophrenic, in my opinion. Normally, you would think like, oh, there's a strong job market. There seems to be, outside of agriculture, new jobs going. The economy seems to be strong. Remember, the US economy is driven by consumer spending, unlike any other economy worldwide. So this is the main pillar of the strength of the US economy. People like to buy stuff. Households like to buy stuff, cars, houses, whatever, luxury items. And now the market reacted in a negative way to this, because the Fed, the Federal Reserve Bank, would like to actually see unemployment go higher first, because that would mean people can spend less money. There's less demand in consumer spending then for especially luxurious goods, meaning prices need to come down, which would lower the inflation further. A lower inflation then again means that interest rates are at least going to stabilize, if not are going to come down in the near future. Q2, maybe Q3, maybe Q4. And this narrative of what almost everybody, including myself, was thinking at that point, kind of got destroyed within the millisecond of this job data being released. And so now the market is confused. Yeah, we saw immediately like risk-off assets plunging, the dollar going like super strong again against all other major currencies. And I actually thought like Friday evening, oh God, it's going to be a bloodbath on Monday. But then somehow, this whole thing reversed. And it reverses like intraday a couple of times also. Yeah, we see suddenly a risk-off move. Like an hour later, we see the risk-on move again. And I think what is happening here is that most investors, also including myself, still believe, well, the economy is actually in better shape than we are expecting. And since we are always trading the future, especially on the stock markets, and not what is currently going on, we are thinking that, well, I think 6 months down the road or a year down the road, we might be actually in better shape than we're expecting. So you have people still buying like every pullback of the stock market, using it to further accumulate position. But then when we go up, you have the other side of the spectrum, people who maybe are breaking even there, or who are just uncertain what to do and want to switch back into, for example, treasury bonds that are selling then. And this is why we see this wild and airy move we are seeing. However, I think you put it like in a analytic wise in a very nice way. this is one of those occasions where I also tend to look more at charts and listen more to my charts. And you can, can you like go again to the S&P 500 there you had? Because I really like this chart you had there just now.
Yeah, I'm gonna give you the chart because you're asking so nicely. There it is. Here it is.
Oh, lucky me. I mean, it's a textbook definition so far of a structural break of a downtrend. Yeah, we went over the last lower high, and all we need now is either make a higher low here where we are right now, so that would be a possibility, or maybe even go, back to, let's say, 4,000 points. That wouldn't be a problem as well. It still would mean we are making a higher low than last time. So in my opinion, the bull market is still intact. I'm not super worried.
Yeah, I think so as well. What I like looking, if you look at this chart here, you kind of have to, like, you can't really say that it's like 100% confirmed, because if you like, we're still in the middle of a move, so we have to kind of see like where is this move going to end? Where is the high going to come in of this move right here? So we can obviously see that this is a low of this move, and this is the high of that move, and it becomes obvious after the fact, right? So here we have the low of the bounce, and we don't have a high yet, so we have to see like where is the high going to be put in, and we might like, this would be good if we have a high here. So I'm thinking where's the lowest point where the low can come in, and I think as long as we have a higher high, like technically speaking, you can create a low all the way down here and still have a bullish structure. So you'll get something like this. So we might have like a big move to the downside, maybe even lower, like 3.9. 3.9 still has the possibility of creating a higher low. But the lower you come, the more resistance there's going to be to the upside. So I do really hope that this area here, because this is not a low, like this is just the same move. This is not a swing point, right? That's just a move on the 4-hour trend, right? So what I'm thinking is we need to have something like this, like like a range, break that range to the downside, and then form like a bottom here and move higher. That would be like perfect. It's perfect, because then we don't have a lot of resistance to the upside. So the S&P 500 is like a really good position to like soon confirming a bullish market structure. And what you want to do as well, you want to look at the other indices. And one index that is like really strong is the what is it called? The UK 100. That is the I forgot. That's the what do you call the UK 100? Man, it's like just dead. I'm just dead. It's
my micro off. The FTSE it's called.
The FTSE, yeah, your Microsoft. What's up? Right, so this is insanely strong. You look at the daily. Look at this. It's completely broken above this range. You look at the daily. I mean, it is such a strong market right now. And let me kind of talk about this quickly. This is actually the 9th winner in a row in the reload in the trading room, which is fantastic. But I've made a problem here. I entered this trade, and the day before entering this one, I slept very poorly. But I entered this one the first thing in the morning, and I honestly felt like I need to take a nap. So I'm like, I'm gonna lay down on the couch. But before I do so, I'm gonna move my stops to entry. And that was here. Yeah. So I'm like, you know what? It kind of looked, because price were trading like up here. And I think, it's you know what? It's going to hit that TP1. So I might as well just move stops to entry. Now I didn't update that in the group, because I thought this is just a bad thing to do. I can't teach this to people, right? Because this is not the way you should be trading. So what happened was, yeah, that happened. I got stopped out, and then here we are.
But it's funny that you mentioned, because the exact same thing happened to me just recently in the S&P 500. I went long at, I think it was around 3,978 or something, in anticipation that we are going to see a move probably all the way up to 4,300, maybe 4,400 points. I can explain later where that zone comes from. And then it went up almost all the way to 4,100 points. So I moved my stop to 4,004 points because I thought like, it's so nice up. I don't want to lose on this trade anymore. Well, went down, touched my stop loss, and then went up again. It happens.
Yeah, it's so
I know this is probably something a lot of people out there are struggling with as well.
Yeah, I mean, and it's so frustrating because we know we're not supposed to do that, but it's like, we don't have anyone else to.
I don't know if you're not supposed to do that. I kind of like to do it because, in my opinion, it's like once you are up by a great margin already on the trade, I don't want to lose on that trade anymore.
Yeah,
maybe it's a psychological thing for me.
Yeah, but what I have, like, one rule I have is if TP1 gets hit and it's like it's looking strong, I'm gonna move my stops to entry. And then if we have if TP1 is hit, I move my stops to entry. So I have a lot of small winners and a few big winners.
So you basically you broke your own rule a little bit on that trade.
Yeah, what I did was I broke my own rule and I moved stops to entry before TP1 hitting. Because the thing is, like, TP1 is always in an area where it's far enough away from price where I can move stops to entry without having these fluctuations. So I would actually been saved by that. But and then the next time I move my stop up, I need to have a higher swing low. So that one right here, and then breaks that. So I would have my stops here now. That's not the worst point. The worst part. The worst part is I also entered this one. So, and I entered this one. I saw I was in my car. I was not driving. So I'm in the car. I got an alert and I saw this and I entered the trade on phone. I had a member of the community and I'm like, can you calculate this position for me? I'm in the car. Can you do this? Blah, blah. And he did the TA because we're trading the exact same system and he's a very good trader as well. So he gave me a chart with the setup and everything. This looks good. I'm going to calculate the position, enter. And then when I get back home, I do some TA on the high time frames. So I'm like, God damn it. This is not a trade I should have taken. But I decided to stay in it as well. And that decision came after getting stopped out on this one. So I think this is like, I got influenced by the loss of UK 100. I entered the Euro NCD impulsively while in the car, not even doing any TA. It's just absolutely catastrophic, behavior, which is funny because this all happened. Like, this is the first time I'm making mistakes like this in probably like, probably like months. So
I think both of our January was too good. So we were bound again to do a couple of stupid things.
Exactly. And that's my point here. This one, if it weren't for the fact that I got stopped at it, actually I have a very small winner, but it's still profitable, very small winner, but pretty much stopped out at entry. I think I had my stop loss a little bit higher at the white line. But my point here is this would have been the 9th winner in a row after having like one of the best months in terms of win rate in my whole career. So what happened here, I think the fact that I moved my stops to entry here was basically based on a fear of seeing that win rate and that losing streak ending. So I think it's and I've been doing this for many years, and you've been trading for many years as well, and we make mistakes. Like we do make mistakes. It's very important that when we do make mistakes, it's going to be small mistakes, not costly ones.
Actually, I was like kind of thinking about that during our live stream last week. Because we both, we were like at a level of full of confidence, had a fantastic January, and kind of had this voice in the back of my head, oh, Dirk, you know how this goes. Normally after you had like a very successful phase, there's going to be a more troublesome phase around the horizon. But it's exactly what you said just now. This is where your discipline and your risk management kicks in, that you make sure that even if you have now again like 2, 3, 4, 5 or more losers in a row, that they are still small losses and they don't eat up all of your winners again.
Exactly. That's the thing with risk management. I mean, good risk management and trade management will give you the opportunity to make mistakes. Like it's going to give you some room for error. Then, of course, if you don't make these mistakes, you're going to be much more profitable. But we're all going to make these mistakes, and I think. I think this is the case of how I'm always talking about you have an emotional scale where you have like euphoria and fear, like positive emotions and negative emotions on each side. And as a trader, you have to find the balance on that emotional scale so
Mm.
one doesn't tip the other way. Because if the left side of the scale, which is like the positive side, goes up, obviously the right side of the scale, which is the negative emotion, goes down. And when it flips, the emotions are going to be very exaggerated, right? So the exaggerated emotions, like if you're very euphoric, when that ends and you have a loser, if you can't control the euphoria and the positive feelings of having a win run, the negative emotions are going to be very strong, and that's where you kind of fall into the danger of over trading and making mistakes based on your emotions. It's all about being just balance. And I think I'm definitely at that point, but it's so extremely frustrating waking up to this and seeing like. And another thing, like I'm doing a funding challenge, and this trade right here would have given me another funding account. So it adds more,
Yeah.
more pressure and more. But yeah, I think we have to be balanced mentally and
It's kind of funny that you mentioned that. I had a talk about something like this with another trader from my circle of friends the other day, and he told me, you know what? Every time I do a trade and I think like, oh, if this trade is successful, I can buy me like something like this, or like I can fulfill myself a wish, or I have reached a new level. If I have
yeah.
this in the back of my mind, this trade always fails, loses me money, or I get stopped out unluckily. So this is really what I had to thought of just now when you told about this. It seems like if we don't enter a trade with a neutral mindset, like a analytical mindset or 100% analytical mindset, they are kind of bound to fail. So even a little bit of emotion that goes into it can, tip off the balance you were talking about just now.
Yeah, I think, and this trade right here, the UK 100, like this is a perfect example of my system. So I'm not that irritated by this trade, because the fact that I moved stops to entry, this is not a loser. I didn't lose any money on this. So it's not like costly mistake. It's just I missed out on profits. Now, however, the Euro NCD trade, that's really bothering me because that's not a perfect example of the system. If I would look at the daily, I would say that this is a range. You're trading a range, and you can't buy here because price is most likely
Mm,
coming down to test the middle of the range. So you
mm,
have, price bouncing between range highs and range lows. But before you test range highs and range lows, you have the range middle, the range EQ. And what happens is usually when you have like a strong breakout like this, you're going to come down and test the breakout area, especially if that breakout area is confluent with the range EQ. And in this case, it's also confluent with that reload zone, right?
mm,
Right here. So you see how the wick, and you have the monthly open. So you have the monthly open right here. You have the range EQ, and you have that middle point of the reload zone and the daily moving averages. And I'm looking at this, I'm like, why? Why would I think that taking a trade like this before it hits the best possible retest area, why would that be a good idea? And the answer is very simple. I didn't do enough technical analysis on this trade. I entered this trade from another person's TA in
mm,
the car without even having access. I did it on my phone. I didn't. So that is a bad decision. Like that's really really bad trading behavior. This here is just small mistake. This is a major mistake. But then again, I'm like I lost one tenth of last month's profits. So it's risk management, and so it's not a big problem. But I
mm.
think we really have to be vigilant and really before we make a decision we have to ask ourselves like is this a good decision? Why do I think this is a good decision? And how am I feeling at the time of making this decision? And if I would have, if I would have asked myself those questions, like seriously, just ask myself, like, are you really in a balanced state of mind? I would have to say no, because how could you be in a balanced state of mind? You're in traffic. You're
Yeah.
you're trading based on another person's charts, like we did when we first started trading and didn't make any money, right? It's just a very, very bad idea. All right, let's not go deep into that. I want to ask you about something I've been thinking about when I'm looking at the S&P 500 chart here, and then I'm looking at the Bitcoin chart. And there's some problems here, right? So the S&P 500 chart, and you look at the Euro 50, extremely bullish. Another trade I missed out on here, perfect. But anyway, so we have UK 100 very strong, Euro 50 very strong, the Nasdaq pretty strong. Even the Japanese index here, the Nike, is fairly strong, right?
Mm.
At least locally. So everything's looking pretty good. And oil is coming back to interesting levels. You're going to see oil probably performing quite well in a bull market. But then you have Bitcoin, right? And I would like to say that Bitcoin is looking strong because you have this move, but I don't think it looks very strong compared to the S&P 500 and the other indices right now, because we still have that bearish market structure on the whole. We're still inside this major daily range, and it looks just so obvious that, like, to me, it looks so clear that it wants to test that level
Yeah.
while the indices have already broken up. So the thought that I'm having here is Bitcoin lagging behind, or I mean, that has to be the only reason, right? Because it's a risk on assets, and equities, the risk on asset, everything that's risk on is moving higher, except
Yeah, it's
Bitcoin.
it's. I think Benjamin Coven from Into the Cryptosphere this week, he put it in very good words, and I just want to quote him. He has an index that he's tracking, which he calls social risk, meaning is crypto at the moment very much hyped on social media, or is it pretty much ignored? And we are at a very low point there, so it's pretty much ignored by the general public. Not talking about us, of course. We live in this kind of crypto bubble, and on Twitter all I see are crypto tweets, because this is all I tweet about as well, or what I tweet about most if I'm active on Twitter, which I'm not very much, sadly. And he calls this the phase of apathy. So where nobody just, I'm pardon my English, gives a flying fuck about Bitcoin anymore, or about crypto. And this is very, very typical also in the late stages of a bear market, or in the beginning stages of a bull market. And I think this is what we are seeing a little bit in Bitcoin. This is why Bitcoin is not so euphoric to the upside. And I love the magnet, by the way, you pointed there, you painted there. And because it's one-to-one what I have on my chart as well. I would like to see the price go down maybe to 20.5, maybe even just 21,500 US dollars, which I think then probably is a good area to build up a swing trade again, because you can have a risk reward ratio pretty much positive, and you can earn multiples, in my opinion, to the upside. I mean, one thing that makes it a little bit positive is that we had this golden cross on the daily in Bitcoin this week. And although I don't like to necessarily work very much with crossovers of moving average, it's undoubtedly, if you analyze it, how it performed in the past, a pattern that has a success rate of 65%. And the minimum pump you're usually going to see after this I'm talking about the upcoming weeks and months then, is 40%. So the cross appeared at around about 23,000 US dollars, plus 40% would put us somewhere at 32 or 33,000 US dollars. If that happens, so if this time is a successful signal, that would mean that not tomorrow, not like a week after this, but in the upcoming weeks, if we really go to that zone up there, then Bitcoin is going to catch up a lot, because then we suddenly have the interest and the FOMO in the market again.
So you're basically saying that now is a good time to now is definitely a good time to accumulate Bitcoin, and
Long term, it's still a good time. So I'm going to stand by this because the 18 months prior to the halvings have shown to be always a good time. It can be that we go down to 20. It can be that we go down to 18, maybe even 15. I don't know. This is why I always say, like, long-term DCAing is the good strategy. If you want to look for swing trade entries at the moment, I would wait for this area 20, 20 and a half, maybe 21,000. Then look at the price action down there. What is happening there?
Yeah, I think that's a really good plan, and also I think if we can consider the S&P 500 to it's about to break bullish, like break out bullishly and form a bullish market structure, then Bitcoin will follow. Like, there's no question about it. Like, I have no doubt in my mind that if the overall risk on sentiment continues, Bitcoin will follow. If it doesn't, there's some fundamentally flawed thing, in the foundations of crypto that is happening, which it's not. I mean, there's nothing fundamentally wrong with Bitcoin at this stage, so there's no reason to not see it rally crazy if the S&P 500 actually starts moving higher, like we talked about earlier.
I mean, but then again, it's Bitcoin. No? I mean, everything is possible. And look at the blue candles or green candles, blue candles on your chart that led us all the way from 17,000 up to almost 24,000, where we peaked out. That kind of came out of nowhere as well. I don't think anybody was, anticipating this move, even if they tell you now so or try to tell you now so on social media. I was happy about it, but I didn't anticipate the scope of a move.
Right. Yeah. No, I definitely agree with you. All right, you have somewhere to be, I know. So, and I really do appreciate you coming on here and talking about the markets.
Maybe just if we have 1 more minute, I just want to show one more chart because
I have all the time in the world for you, my friend.
That's nice. So, can you bring up my chart?
Absolutely.
Because it's so funny. I stumbled upon this morning again. Maybe you remember this. I had this like months ago, also on a live stream. I was talking about this election pattern that the market, after the election of Donald Trump or after the election of Biden, is kind of behaving the same like it did after the election of Trump. Now, excuse me, my charts are really not as beautiful as yours. I'm such a bad artist, so to say. That's why I try to.
They're beautiful in their own way.
In my own way. That's
we're all beautiful.
That's an insult disguised as a praise.
No, absolutely not. I think your charts are beautiful.
No. So what I did here really is I tried to color code this a little bit. I draw a rectangle there, then I copy pasted this rectangle. They are exactly the same size to here. The bull market one, so right after the election, where we had those 444 days of great performance, plus 33% in the S&P 500, followed by a bear market or a choppy market, and then followed by a bull market. And for me, still, it's eerie how much they look alike, really. Not like, of course, to the exact date. That wouldn't be possible. But I remember last time, so that must have been beginning of December, I drew this line in here. So back here, I said, somehow I think the first, if this pattern shows consistency, the first bull cycle zone before we go down again should be somewhere here between 4,300 and 4,400. And the closer we get, the more I'm amazed that this seems to be coming true. And remember, this is like was drawn like, what was it, like 3 months ago. And I just rediscovered it this morning. I thought like, oh, that's nice, I scroll like through the 100 chart layouts I've saved on TradingView. Some of them I never look at again. And somehow I stumbled over this one. I thought like, this is really eerie how this is still kind of becoming true, as it seems.
Yeah, and hopefully. I remember you talking about this like last year. We had like a very early webinar. You talked about the election cycles and all that. Yeah. So it's very, very interesting to see this right here, because it definitely makes sense.
For me, it's always, this is actually why I didn't bring this up because I want to brag or something. I brought it up because for me, this is always important, charts like this, to get like to kind of zoom out, you know, to go up in the air and look at the broader picture. Because we tend to, as swing traders, we tend to sometimes entangle us in, you know, those hourly charts or maybe even 4-hourly charts, or if you're a scalper, 5-minute charts or 15-minute charts, and kind of lose the broader perspective of where things likely are heading. That's why I found this one very funny.
Yeah, it's very important to have that overview, that high time frame overview, to see what's actually happening out there on the high time frames. It gives you a very clear idea of where you might be trading in the short term as well, because you want to follow that overall trend.
Yeah. All right.
So man.
That's just as final words by me for this week.
Well, I'm very happy that you joined here with us today, Dirk, and I'm looking forward to doing many more live streams like this one. And thank you for watching, everyone. And remember, you need to follow Dirk on YouTube. He's PrimeXBT Academy on YouTube is the YouTube channel he's doing. He's also on Twitter. That's also PrimeXBT Academy. You can find the links in the description below. I highly recommend you check him out. There's some really good content here. This is one of the few traders out there who's actually honest and real, and not going to shill you any bullshit like he's just a trader. All right, guys.
Thank you. Take care, everybody.
Thank you all for joining, and I will see you guys in the next one.